March 20th, 2026. If you look at the SPY on a daily chart and you look at the 200-day pink right here, this moving average 200-day, a lot of interesting things happen when we hit the 200-day. If you go back in time, we haven't hit the 200-day since May of 2025 when we had that great sell-off in April of 2025. And the 200-day moving average is used, widely used by institutions. So if you know institutions are using something, it doesn't mean you have to use it yourself, but it does mean you need to understand and pay attention to it. So you're going to notice the orange 50 and the pink 200 come into effect many times when it has to do with the SPY and the stock market. And then we've also got a shorter one, which is the 20. I was saying the orange and the teal mixed up. The orange is the 20, and then the teal is the 50. So 20, 50, and 200. These are very important levels to look at with regards to moving averages, with regards to understanding how institutions act. So, had you been watching this situation set up, this meeting of the 200 MA with SPY, you would have been prepared for something to happen around this level. And this level is 656.34. If you look at the right side of the screen, the price, or just in general, you just mark that level, and then as the day unfolds, you want to look at how price reacts to that level. And after it reacted today, we had a huge sell-off. These are easy setups. These are easy scenarios that people learn and memorize and they act on, but they don't happen all the time. This is a rare event. So we're also going to look at TQQQ real quick, otherwise known as QQQ, NASDAQ, and we're just going to compare. So we hit the 200 a while ago. We had some resistance and some fighting as soon as we touched it, consolidation around it, and now for the final straw. The 20 is now crossing the 200. The 50 is not crossed yet, but this is just straight up. If any institution is involved, they don't need to think about, let's buy. No. They're all looking for shorting opportunities, specifically intraday. So the downward moves are going to be more violent, and the downward moves are going to be more consistent. Therefore, the EV, the expected value, the edge, increases when you're playing to the downside, when we're in the middle of these events. So with that being said, let's get into the trades I took today and talk about everything. And we're going to go to the first trade I took, which at the open I was looking for a downward opportunity because the market's in a sell-off. I was looking for a downward opportunity, and I saw this big red candle here. You see it? You see that candle, don't you? Look at this candle. How could you not see that candle? Look at all these normal size candles for the past 20 minutes, and then boom. Okay? So when you see that, that's generally going to be an entry if it aligns with the strategy, which is the momentum aligning with the higher time frames. What is the 5 minutes doing? 5-minute twins, regular and extended hours both going down. That's good. We have alignment there. Not full alignment here, but we do have good alignment here. Let's look at the 15. 15 is in the red, touching the red, going down. That's good alignment. 30-minute in the red. That's good. In the red. We're ticking down as this trade happens. What about the 2-hour? 2-hour, we've been going down. So we had a full alignment with a large candle. That is obviously an entry right there. Look how the price played with the previous day's high right here. And then what happens? We penetrate straight through previous day's high. So that could have been a great entry for you as well, obviously, is what I'm getting at. My entry was here. Stop loss slightly above the candle, and then you sell the majority of the position at that first mark, which is about a 0.6 R. And this kept going for the rest of the day. This was a grand trade. I didn't get to capture the grand trade because my stop loss was hit. At a certain region, my stop loss was hit. So I took good profit down here for the runners, but it wasn't a grand trade, unfortunately. Then I noticed a consolidation occurring in this region, so I drew out this blue box right here. And this blue box, I was saying to myself, look, this is literally, I'm about to explain the challenge for being a trader. One of the hard things about being a trader, an intraday high frequency trader. I told myself, once I started seeing this consolidation, I said, I'm definitely not going to take a trade until the price action breaks out of the box. That's what I thought to myself, and I've done this before. And I didn't do it. I failed. I ended up taking a trade right here. Why? Because we had a volume confluence. It was the setup. Everything was nice about it. It ended up being a loss. And it sucks. But literally, think about what I just said. I told myself over here, hey, I'm not going to trade this zone until it breaks away from the zone, like clearly away, like right here. So I didn't stick to my gut feeling and my intuition and my decision, and I did take a trade, and it resulted in a loss. So I took the loss right there. A little bit of time went by, 15 minutes or so, and then boom, we get this monstrous. So of course I fell for it. And we had alignment in the 15. It hadn't really concluded yet, so it was a weak, risky trade. Okay, this was a risky trade. The 5-minute wasn't aligned. We were not in full alignment. This is a risky trade. And I almost got stopped out because, entry was here, stop loss slightly above the candle. It almost stopped me out. I actually sold a little bit of the position up here for a partial exit to protect. But then it did come back, and it resulted in a great win. So that was nice. Later on, and again, just to recap, this is the real entry. Look at this. I mark a zone. I say I'm not going to trade until this breaks through the consolidation zone. Later on, it breaks through the consolidation zone on what? On increasing volume right here. Beautiful volume setup. It was a full alignment setup. So it's like, dang it, I should have added to my position. I should have literally added to my position. That was the mistake. Because I still had the previous trade running right here, making profit. And I should have added to that open position from my entry right here on this large candle. Anyway, the day progressed, and then this setup came to me. What is this? Look at this. We have a volume confluence. Momentum shifts down. We're in full alignment. Another great win. Beautiful win. Next trade was here. It's actually this one. Missed the... I don't know why that's right there. There we go. And why did I take this trade? Same thing. Volume confluence, right side of the momentum. The 5-minute was a little risky. Hadn't fully aligned yet. The 15 and the 30 and the 2-hour were all still in a full alignment. That was another great win. So it's really about looking for those full alignment scenarios, waiting for a volume confluence to occur, and then making money. Now we're going to talk about one more thing. We're going to look at SPY. Remember when I told you about SPY? I told you there was a level with the 200-day moving average, MA, and how institutions look at these levels. Okay, remember how I was talking about that? So here's the daily chart for the SPY. Here is the 200 MA, this pink line. Here's where we intersect, about right here. I'm going to mark this, I'm going to say it out loud, okay? So this level is about 656, 65. 656, 65. Let's find that and see what happened. 656, 65. Right here. That's the level. Interesting. What do you think about that? So we have some known institutional interest, huge liquidity, huge potential at this level, at this purple level right here. So let's go through the day. The SPY opens. The SPY is messing with that level and it starts to sell off, okay? You could take a short right there. Why not? We just saw what happened. We hit that critical level, that 200 MA on the daily, and now we're selling off. And what else is happening? Let's look at the alignment at the time. We're in a downward alignment. So that's a short right there. Look at this potential profit. If you short right here, look at this potential profit you can make. Okay? Now, the one I want you to really pay attention to is we come back up. We come back up. Remember I said 656.56. Okay? That's interesting in its own right. What am I doing? Hold on a second. There we go. 656 is right here. 656.65, that level I just told you about to watch out for, is literally right here, this top wick. Ladies and gentlemen, do you see how simple trading can be when you look at just patterns in general and you just look at key levels and you look at how price reacts to key levels? So this is what I wanted to tell you about today. I mean, that's the strategy to work on in your own personal life if you're interested in trading, what you want to do. Every once in a while you're going to get golden opportunities with a stock hitting a 200, with a SPY hitting a 200. You're going to get that golden opportunity every once in a while, okay? These are rare opportunities, but they happen. But you're also going to get many other opportunities with the 50, okay? The 50 does the same thing. And you're also going to get the same opportunities when you look at the recent day's lows and high. When you mark out the previous day low and the previous day high, when you mark out the pre-market low and the pre-market high, when you mark these levels, which I mark all the time, that's literally what I do, then you're going to get to see how price reacts at these levels, and you're going to start to understand what really is going on in the market. These levels represent large amounts of orders, buy orders, sell orders, liquidity, which is otherwise known as potential energy. With all that being said, I'll see you in the next one.